Let's go into LVMH, which stands for Moet Hennessy Louis Vuitton, a luxury goods company, and it operates in 5 areas: wines and spirits, fashion, leather goods, perfumes, cosmetics, watches and jewelry.
Exactly, and even a selective retailing outfit, which is Sephora. People will be familiar with that one. It's a hard store to pass by if you're in the makeup wearing business.
Market cap 117.3 billion euros, a PE of 29.3, a dividend yield here of 1.7%. Let's start with that share price graph.
And it's that move at the end there that has got everybody excited. It's really the sector leader in luxury goods. And
it's very difficult not to get excited about a graph that looks like that.
Tremendous. So the earnings came through strong across all of the different divisions, and that got people excited again after a few years of worrying about China, worrying about Europe, worrying about the US, etc., which are their core markets.
So French champagne is still the order of the day in some households.
And cognac as well. They had, I think, over 20% increase in volumes in cognac. Now remember that, you know, this is a high-end product. They've got a lot of pricing power. The potential for further pricing power on the back of those volume increases, you can imagine, will sustain the sales growth and the earnings growth. And especially, as Paul said, you know, from the regions in which they want to grow, China and Japan. So still, I mean, it's on a high PE, I suppose.
And can it sustain that? I mean, you look at that graph. Can it sustain that momentum?
Not forever, okay, but it has kind of found a new level now, and the question is, can it sustain the level? And maybe it may not be able to sustain the growth, you know, judging from that graph. But you know, it's on a reasonable dividend yield. It's very defensive, very aspirant brand. It is the bellwether for luxury stocks.
Well, we don't own LVMH.
No, we could have at some point, because remember it's Paris listed.
What a pity.
But it's got its you know, ADR, and you can trade it in New York. I don't know. I mean, it's also benefit from a bit of a rearrangement of its management structure.
And it's also a re-rating of the stock that we're seeing coming to
this
the
one is
fore here.
controlled by a very clever Frenchman called Bernard Arnault. It sounds like I'm battling with my tongue there. He controlled it through Dior. But he's now in the process of rejigging that thing, so it'll be a direct stake only. So Dior is getting absorbed by the larger group, and they're doing unwinding of the cross-holding. I think that's part of the reason, because people prefer in general that transparency, or institutional investors do. But I just think it's firing on all cylinders. So people were worried about one division or another. They're not worried anymore.
Again, the question has to be, have you missed the boat to really experience the value unlock that you've seen there?
I don't think so, because I think, you know, as long as there are no net economic shocks, the outcome of the French election was positive, because of course being French-based and having lots of its kind of capital structure exposed to French markets, that could have been a net negative. That's out of the way as well.
Well, we can't rule out economic shocks anywhere in the globe.
Yeah,
you know, and just say that it's not going to happen, because we've been surprised on many fronts.
I think that's always a risk, right? And you got to look at the price at the end of the day. I think at below 30 PE, I think it still makes reasonable sense from an investment perspective. If it was on a 50 or 60 PE, then we'd probably be having a much more different discussion.
The leather division has been very strong, so that's the you know, Louis Vuitton bags, which is, you know, handbags as well as purses, and then luggage. I mean, I don't use that stuff.
I can't say that I've ever thought of spending that much money on my luggage.
There are people who basically buy every new item, you know, rich people.
I've always wanted to be a trust fund baby, but that's not our reality. I'm not sure if you're an investor in Louis Vuitton luggage.
Yeah, not necessarily the products, but certainly, I mean, listen, I suppose for some people to pay 50,000 Rand for a handbag is not a lot of money, and to keep up to date with the most latest models of that. But as Paul says, you know, once you buy it, it becomes addictive, and then, you know, you maintain, you can't downgrade. So, you know, I think that does give it a very strong moat, and I think that's one thing about Louis Vuitton, is that they'll
look, let's put it this way: you're never going to find Louis Vuitton luggage or other items on a sale.
Absolutely.
And I think the other net positive, just one final point, is that Paris and visits to France were down quite badly in 2016 because of terrorist attacks, but it does look as though that's sort of receding from people's memory and the positive sort of glow of the election. I know there were some events there, but that's very important because lots of Asian and other tourists coming into those enormous boutique stores on the Champs-Élysées and places like that.
Let's call it hot or not, Nesan.
I'm going to go hot with this one.
Paul, hot or not?
Yeah, hot on that one too.